And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my fellow futures friends, family, futures traders. It's time for the market prep, where we focus on context, risk management, and patience. We can't predict. We can, however, prep. Wednesday, January the 11th. My name is John Hoagland. As always, thanks for trusting me with your time. Very limited known economic data due out today. I don't see any talking Feds on the schedule. 9 o'clock this morning, really the only economically impactful, aside from crude oil, of course. The Atlanta Fed inflation expectations is due out at 9 a.m. Central today. 9:30, the EIA petroleum status report due out. Pretty big jump by the API as far as inventories here in the U.S. It's going to be an interesting trading day all around, although there may be a whole lot of hurry up and wait in the markets today. U.S. stocks are steady to higher, awaiting tomorrow's CPI numbers for hints on inflation and how monetary policy has affected the economy so far, and hints to possible Fed expectations moving forward. The whole thing seems to be, of course, about rates and inflation. The Fed Chair Powell yesterday in Sweden did not talk policy, but did mention the importance of the separation of the Fed and politics, starting to possibly sense a little pressure from the politicians in what they are doing. The FAA has halted flights due to a failure in its computer NOTAM system. It's a system where they're tracking flights. So I guess they've halted flights now until at least 9 o'clock this morning. I think that's probably Eastern time. Hope that irons itself out quickly. The airline industry has been taking it on the chin lately, especially over the holidays with the number of cancellations. The last thing they need now is anything more like that. Crude prices have been wrestling between Chinese rebound and demand, and now we've got a surge in U.S. inventory. The API last night announced a 14.9 million barrel boost in crude stocks here in the U.S. It's the only thing that I think is keeping the prices reasonable with the news of possible increasing Chinese demand. The EIA is still showing a negative 2.2 million barrel draw for the expectations for today. It's going to be an interesting day in crude oil. It's a hell of a day at sea, sir. So I guess we're going to find out as we go along, right? The VIX this morning up 0.5% to 2068 after peeling off about 2 points yesterday. It's up a little bit today. The dollar index about flat at 103.3. The yield on the 10-year slightly lower at 3.58%. As always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Please subscribe to our YouTube channel if you have not already. You can get notifications when we do go live. Today we have group coaching at 12:30. I already put the link in for that, and directly after that at 2 o'clock we have Make Hoag Money, the afternoon session. Excuse me, my goodness, I keep getting a little tickle here. I'm going to have my little bit of my coffee here before we get into the charts. Got to say good morning to everybody. It's always such a pleasure to see everybody, and I appreciate everybody saying good morning and let me know you're here. Charles March is the first one in the room and wins the prize this morning. Caesar, Scott Sawney, Concord, Zach, good morning. Goodness. Caprice, good morning. Shaw Cunningham, happy hump day to you too. Joel MB, I was cracking up. What happens if you get scared half to death twice? I guess that depends. Are you a cat? You just get Neil will have 8 lives. Shane, good morning. Gentle people, good to see you. Tanya, good morning. Vince, JD, always a pleasure to see you, sir. Terry King, Phil P, Stephen Carlson, Zach. I like what you're saying here, and I kind of was going to touch on something like this today as well. Remember to be grateful for the opportunities that allow you to be able to trade food, shelter, the internet. Also, be proud of your determination and be proud of your own ability in the markets and having the mental capacity to trade. You worked for this. You earned this. Now, don't ruin this with greed. Zach, I think one of the things that you're talking about there is, of course, being grateful, but also being humble. We never know what's going to go on in the markets. Every time I have lost humility, I know that there's danger at the door. I can't make the markets do anything. I am just a feather in the wind of the markets, if you will. The market doesn't know me, doesn't like me, doesn't dislike me, doesn't even know I'm here. It's up to us to try and find our opportunities in there, and remaining humble and understanding that you're not always going to be right is going to help you maintain good risk management and hopefully keep you on the right side of things. Really good comments there this morning, Zach, and we thank you for those. Every time, well, humility is a funny thing because if you the second you say you're humble, you've lost your humility. Just keep it in the back of your mind that nobody knows exactly what is going to happen anytime here. And of course, we do have to be grateful for the opportunities that these markets do afford us. Dowitzer, good morning. Laura, good morning. Serenity Trader, good morning. Taurus, George Duque, good morning. Haven't seen you in a little while. It's good to see you. Sunny, good morning. Only those who will risk going too far can possibly find out how far one can go. T.S. Eliot, great quote for us this morning, Sonny. You gotta sometimes, push your comfort zone to find out where you're at, right? Alejandro, Anissa, Pablo, Jason, Haggle Matters, good morning. Rick, the Randolph to my Mortimer, good morning, sir. Love you. Andy Bleed, Orion, good morning. Haven't seen you in a while, Orion. It's nice to see you. Rusty Golfer, hopefully my spirit animal has a good trading day today. JT, good morning to Rooster. Sarah Hall, prayers and love as always to you as well. Sophie, Adrian, Travis, good morning, Travis. Happy to be here myself as well, Tanya. It's always great to see everyone. JT, yep. Zach, a lot of folks saying thanks for that information, for those thoughts. Something I was thinking during meditation after a red day yesterday. It's hard to stay appreciative and grateful on a losing day, isn't it? But you seem to be doing a very good job at it, and it's a good lesson for all of us, I think. We're not always going to have winning trades. We're not always going to have winning days. And it's important to remember to stay that humble and grateful. Whenever I finish these preps, I always say, stay grateful, stay humble, and stay creative in your trading. So great stuff there, Zach. Great, and thank you very much. Again, today is Wednesday. We have group coaching at 12:30 Central. We have Make Hogue Money at 2 o'clock, and then we finish up the day with the market reflection. The reflection is, just kind of an opportunity for us to sit down, breathe, relax, take a look at what happened in the markets, see what happened in history, and just kind of end the day a little bit light, but with some, kind of reflection of what happened throughout the day. I'm always looking for ways to improve everything that I do here. If you have any suggestions, particularly for the market reflection at the end of the day, please let me know. jhoagland@topstep.com. That's my direct email. JHOAGLAND @topstep.com. Let me know what you think, how we can improve it, and see what we can do. All right, we're going to jump into the charts, starting with the daily in the S&Ps. Our equities have been trying to move higher. My question is always, okay, we know that the direction is attempted higher. How good of a job is it doing? And all of that can change in a heartbeat with some new information, whether it's known or unknown information. And then, of course, tomorrow is the CPI, and we got to remember that can be a doozy. So we're gonna trade what we see today. We're gonna take it slow and patient, and we'll see what we see. Let's take a look at the S&Ps to begin with here. This is the daily chart in the S&Ps. We've been, over the last couple of weeks, largely kind of range-bound here. We're attempting to break out of that. We attempted on Monday. Sellers came back in and pushed this market lower. This was some pretty stiff excess up here, and we continue to try and push higher. Did we add open interest yesterday? Yes, we did. The estimated is a positive 22,000. When we did what we did yesterday in the S&Ps the day before, the estimation was slightly positive in open interest, but the open interest on Monday, the 9th, actually was a loss of 2,000. So that to me is good news for longs. We lost open interest on a day where there was a reversal pattern. That's just long liquidation, if you ask me. That takes selling power away from the marketplace. Adding another, again, estimated to 22,000 on this move to the upside yesterday is encouraging for continuing the move to the upside. When the market is directional or non-directional, it's important on a daily basis to ask yourself, what direction is the market attempting to go? And how good of a job is it doing getting there? So volume was a little bit thin yesterday. Even in New York, it was a little bit lower. That doesn't necessarily alert me that much because we know in the equities, volume comes in strong on the downside and upside volume seems less important than the increase in open interest that we saw yesterday. Again, anything can happen, but it seems to me with the loss in open interest on Monday, the increasing open interest we've seen since the beginning of the year, in essence, we've seen increasing open interest as price continues to move higher, and that's healthy for an auction process. So the market is trying to go higher. To me, it's doing a pretty decent job. I'm giving it a B minus. We want to see some more continuation and maybe some really filling in of this space that we've got above here. Of course, anything can happen. Here's the 30-minute chart. So yesterday, we had a late spike to the downside. We opened below it. We rejected lower pricing after that late spike yesterday. That's saying something. Okay, there's a high probability of accepting of lower pricing below the base of below a late spike to the downside. This rejection and increase in open interest to me is very impressive, and we've also now put in a late spike to the upside yesterday. Those rules. What is a late spike? It is when the market extends the range to one direction or the other late in the day, the last 30 minutes, and closes in that up in that area like it did here, settlement yesterday, 39.40.75. So now it looks like we're going to open with a gap above the late spike, which is, again, the highest probability of continuation, of acceptance of higher pricing. We got a big number coming out tomorrow. I don't know what the expectations are for today, but the nuances are lining up higher this morning, especially if we open with a gap above a late spike. It doesn't mean that the market has to just continue this move to the upside right away. Opening range trades may be something we would think about today. Taking a look at the TPO chart, this is regular trading hour only. Okay, here's the late spike from Monday, the rejection of the late spike and the creation of the late spike yesterday. We're trading 39.55.50, which is a gap above a late spike. We have excess at the low yesterday. The initial balance was neither the high nor the low yesterday. So the market was really seeking new levels to facilitate trade. If you had to pick one today, I would say that that area to facilitate trade would be higher, at least at the beginning here. So while we're out of balance in the daytime frame, according to yesterday's range, what does it look like back on the daily here? Looks like we are still out of balance. This market is seeking new levels to facilitate trade. Yesterday's TPO chart was a normal variation day. Where did it go? I lost it. I think it went over to, there it is. A normal variation day. We extended below and above, leaving the late spike. The market does trade above and below the initial balance. It has a tendency to remain range bound. Not so for us this morning. The only spoiler that I see are some anomalies in yesterday's profile. Now, this is an old anomaly that was rechecked twice during the regular trading hour session, but still remains kind of an eyesore here. Another one here. Okay, we've got a little hole here. So if we do pull back, these are going to be interesting targets for us. And then there's always the possibility of the value area special situation play, which did not play out for us yesterday, but we didn't really accept inside value until the late spike. Where did we trade to last night? Into value. We're in the previous day's area of value. If this is going to be a continuation of the value area special situation play, we've got volume point of control up here. We've got a TPO point of control up here. So there's visuals, there's the late spike, there's the gap. So I would say that the nuances in the S&Ps are lining up more towards the long side than the short side. If we do end up getting a pullback, my concern is that we're going to get into these anomalies, and then it's, do we reaccept inside value from yesterday? Take a look at crude oil. This is going to be a fascinating market today, it seems. Looks like it's continuing its early move here to the upside. Don't forget, it is in rollover. Next Tuesday, we'll switch from February to March. March. No, the TPO colors are not according to risk. Now, we don't have make-whole money, so I'm going to show you how to change the TPO colors when we get to the TPO chart here in crude oil. There's another question about that, and I'm hoping that the person who asked that yesterday is here today. Zach, it may have been you. I'm not sure. I'm trying to remember who it was, but I'll show you in just a few minutes here. So we've been kind of looking at the creation of a bear flag here. It looks like this bear flag is still intact. Volume and open interest, volume a little bit lower yesterday while we are rolling into the March contract. Overall, we added 23,000 contract, but we lost 19,000 in February. That's what makes it blurry to kind of look at open interest during rollover, because a lot of increased volume, increased open interest in the future months, decreasing open interest in the front month, which is most important, is why I kind of look at the overall number, which again in the crude oil is approximately an additional 23,000 contracts, but a lot of that can be due to rollover. Take a look at the 30-minute chart. So we've got, I'm going to make this a little smaller at first here. So we know that the overall picture of crude oil in the medium to long time frame is to the downside. So we've got kind of narrow ranges. We've got 1, 2, 3, 4 points of contact on this bottom trend line, which makes it a little bit more valid. We've got the market moving away from it. Where does this line come in? Let's make this a ray. So we're going to hit weekly kickoff high if we continue to move higher before we're going to hit this trend line. This trend line is 1, 2, perhaps 3 points of contact. My real hope is that for everybody that we take out the low of this trend line down here and we barrel down to $70. I'm really looking forward to that opportunity to see what the market does there if there's opportunity. So we got the market moving higher again after one of the biggest boosts in crude inventory we've seen in recent memory. Take a look at the TPO chart. So excess on the low yesterday. P-shaped profile indicates short covering, perhaps a middle short covering continuing from the laggard shorts on the lows here. When those laggard shorts are out, then we might see this market turn around. Again, we're also looking at weekly kickoff high, which is 77.80, directly related to the point of control up here. We've got a TPO and a volume point of control very close to each other. So I'm interested to see if the market is targeting that and see what happens at that level. So we've got a gap. We actually, I think, almost had a late spike, 75. No, we didn't. This is excess. Now we're opening with a gap. So, the rule is if we can't close the gap relatively early, we should see a test of weekly kickoff high up here. We could. Maybe I shouldn't say should. We could see a test of weekly kickoff high. Yesterday, no extreme from the initial balance. The minute I said that, I knew it was going to fall apart, but it will go back. If we were to go back and look at each of these markets, you would see a high percentage of the time the initial balance, either high or low, remains one extreme of the day. So, all right, so the colors, TPOs, they're not according to risk, they're according to time. If I split this profile, 8 o'clock, 8:30, 9 o'clock, 9:30, 10 o'clock, 10:30, each bar equals the range for 30 minutes. The way to change those is you got to go to configure chart elements. Click on that. Now you're going to get your chart type, which is the TPO. I've got letters for the TPOs. Each TPO is one tick. I take the auto, what is it? It'll keep the chart like in the screen. It's auto correct or whatever it is. I hate that stuff. The letter colors are per letter. So I can go per letter, and here's A. We know that A is red. I can go to O here, and I can go back to red, and then go to P, go back to red, go to Q, go back to orange, go to R, go back to orange. And if there were those numbers on here, they would appear in those colors. So it's not because it looks pretty that we have the colors. It's so that we can look at the profile and say, all right, well, the market opened here. It looked lower. And then for the rest of the day, it tried to rotate higher. P-shaped profile indicates the possibility of short covering, which looks like maybe continuing to today. we maybe see if we can get an opportunity to close this gap. Okay, Zach, and anybody who is interested in why these have these colors. Now you can change it. You can look at these, in extended trading hours as well. So here is the TPO chart that includes the overnight session. Here's yesterday with the late spike. Here's our overnight session. And you do that by adding a session. So you can add another session here. The first session I have is 8:30 to 3 o'clock. That's the regular trading hours U.S. session. Then I have the overnight session that goes from 5 p.m. Central to the open for the regular trading hours. And I've got the rainbow thing going on all the way across so that the overnight has the same effect. I can see where price was over time. And I can split this profile. You can see. Okay. All right. Let's move on to NASDAQ. Similar but different. The NASDAQ already looking at a weekly kickoff level that was left behind by the S&Ps already. These are similar markets, but different, so we have to trade each one by the information that's available in that product. Yes, they are correlated. Yes, sometimes you can find opportunities with that correlation. One thing's for sure, if you see the S&Ps continue to push to the upside, which they're already in this area of space up here, you may see a breakout and acceptance above the weekly kickoff high in the NASDAQ, which is 11,330. We're pretty close to that in our overnight session here. Lacey's dreaming right now. She's barking and chasing something. Her feet are like she's running in her sleep, and she's whimpering like she's barking. She's having a nice dream right now. All right, let's have a nice dream here as well. Open interest is higher, volume unremarkable yesterday. It was lower all the way across. We did have an estimated additional 3,000 contracts in open interest in the NASDAQ, which is okay. We see this market attempting to continue this move above this area of balance. This area of balance is a lot deeper than the S&Ps. The S&P area of balance is much closer to these highs. So weekly kickoff high and these highs are going to be kind of pivotal areas for us. The attempt of this market to move higher, while I gave the S&Ps a B minus, this is getting a C. Because we got to break out and bring in new business above this weekly kickoff level here. Okay, take a look at the 30-minute chart. Okay, no late spike for the NASDAQ yesterday. Oh, yeah, we did have a late spike. What am I talking about? Rejected again. That's saying something. We have a late spike here. Okay, the base of the late spike is 11,283 quarter. The start of the late spike down here is pretty close to our overnight low, which is 11,238 and a quarter. We are looking like we're going to open with a gap. Overnight inventory may be a little bit long, but we can kind of take out that overnight inventory pretty much without closing the gap. So we've got resistance up here. Don't forget about that. This is no longer valid. We're going to put this up here. Okay, so take a look at the TPO chart now. Okay, on this chart, I have not put the colors in the overnight session, so it's all that peach color. it annoys me that I look at that, but I don't really look that deeply into the overnight low, overnight high, point of control, and any kind of ledges or weak highs and lows I'm going to be looking at. So we did have a late spike to the upside here in the NASDAQ, 11,282. Just barely, I think, closed inside of it. Our start of the late spike is right near our overnight low. Looks like we're going to be opening with a gap above a late spike after rejection of a late spike. The nuances are saying, this market is doing an okay job of moving higher. The nuances today are saying continuation probable. But again, remember, everything and anything can happen. Yeah, she was chasing rabbits. She's so cute when she does that. All right, take a look at gold now. Again, this market is attempting to move higher. We are starting to enter rollover. In about 2 weeks, we're going to roll into the April J contract. So starting to see some movement of open interest, which is going to be blurry. We lost 17,600 contracts in the February contract just yesterday, but overall we added 5,700. That's why I collect all of the information. I collect the total of volume and the total of the open interest. Because if we were losing 17,000 in open interest, I would say this rally was over. But we added 5,700 overall, so that's giving me kind of a B minus for the performance here, for the upside move here in gold. Everything in gold, euro, and a lot of these markets are going to be affected if there's any big moves in the dollar, U.S. dollar. So, open interest continues to increase. Volume, not so much. That's a little concerning in gold. Take a look at the 30. Look where we've been, okay? Our recent weekly kickoff high was 1831. Right now, it's all the way up at 1911. We're looking for continuation. Last week's high, if this is in the right spot, yes, this was last week's high after the close here on Friday. But we've been range bound. We've been largely keeping value higher, of course. We've been kind of digesting this new space, this new area that we are in. So, where are we now? Well, we're right in the middle of value. We're at the point of control from yesterday. This digestive area, this digestive zone we're in here, can work a lot like a pullback. If we've gotten too long, this digestion here can even out inventories without a major pullback or without kind of a pullback. So I'm pleased that the market is holding up here. Now I'm just kind of be monitoring for some sort of change out of value, out of range, out of balance to a new area of imbalance where it could be higher or lower. So Monday's high and low, last week's high, important levels. My Randolph is saying he's looking for gold to get back down to settlement, which gets me a lot closer to the lower extreme of this week's balance area to look for an execution. Not really into anything here. We're in the middle of the range. We're in the middle of balance. There's little change to the perception of an ounce of gold here. Let's look at the TPO chart. Excess, weak low, unfinished gap, unclosed gap. This is a weak low, unfinished downside auction. Doesn't mean it can't hold. Look at yesterday. Weak low, weak high. This market is digesting. It is seeking information. It is evening inventory, and the next move away from this area could possibly be substantial. It's coiling. Uh, 76.50 is settlement down here. So we're not there yet. The low was, but currently it's holding higher. All right, the euro. So upside structure, balance, failure to accept lower, now accepting higher. All of this again depends on the US dollar. Upside digestion continues, very similar to the situation that gold is in. Low volume, but open interest did increase by about 1,500 yesterday. Again, volume seems to be cutting off. That gives me about a C as far as continuation, maybe even a D as far as continuation at a new level, because D represents digestion. 30-minute. Look familiar? We just looked at this in gold. The perception of the euro, very little change. Current extremes of balance, where I would be looking for opportunities. Monday's high, Tuesday's low. Weekly kickoff low. Tuesday's low, 107.58. Well, that's 2 ticks away from weekly kickoff low. I would throw a line in here if I was trading euro. I'd also maybe throw a line in anywhere between yesterday's high and Monday's high, because right now we're in balance. Balance rules, we fade extremes until proven wrong. Yeah, Rick's on the sidelines with CPI tomorrow, and I think a lot of traders are going to probably be doing that. A lot of traders will be kind of chilling, watching, maybe finding opportunity in small time frame. Here's the TPO chart. Extremes on both ends. Extremes on both ends. Inventory balancing. Open interest increasing. It indicates energy. A move away from this area could be substantial. Here's the 10 years. It's been struggling at weekly kickoff high this week. Balance rules are in play. Balance low, balance high. Volume and open interest were really inert yesterday. Volume fell off a little bit. Open interest lost about 4,000 in the 10-year. That's a hiccup. It may as well be even. The 30-minute chart. So here's our one close above weekly kickoff high that didn't finish the day there. Okay, it finished below. Resistance, continuation, possible repair up here if we do accept above the high from yesterday's range. Got a lot of overnight inventory to the long side here. A B-shaped profile yesterday indicates long liquidation. We got a whole bunch of trapped longs up here that continued this move yesterday to the downside. Here's the TPO chart. So normal variation day yesterday, B-shape indicating long liquidation, which is supported by the loss in open interest, if you will. Now we're right in the middle. High, low, middle. No, I'm not touching it here. Interested in the extremes. Excess high, excess low. Excess high, excess low. So we're finally putting in some excess on the extremes, but I'm not doing anything in the middle here. Take a quick look at what's going on with natural gas. I just got to check that. So The downside move is intact. How good of a job is it doing? Well, we added 17,000 in open interest yesterday. It is entering rollover. We have to remember that. But volume is remaining strong to the downside. Open interest increasing. I'm giving this a B plus for the performance of the downside auction. They can change at any moment, of course. Here's the 30-minute chart. So here was kind of a bear flag. We broke out below the bear flag. We're still holding below it. Overnight inventory got a little bit long. We're currently reconciling the overnight inventory. So in here, I'm not that interested in doing anything. Our overnight high and overnight low are areas of interest to me now. Anywhere in the middle, I'm not that interested, and certainly don't want to, take secondary trades just because I'm bored or anything like that. And that is likely to happen today with the CPI coming out tomorrow. Just like my brother said, he's on the sidelines today. He's probably not going to be doing much. This feels and seems like one of those hurry up and wait kind of days. We don't have any important economic data known to come out. No talking Feds. It's all about tomorrow, it seems. So we do have the CPI tomorrow. We have talking Feds tomorrow. Bullard, Barkin. Who else? Who else do we think will be barking yesterday? We don't know. So we will look forward to some good opportunities, right? Okay, we got 4 minutes to the open. And again, stay grateful, stay humble, stay creative in your trading. We don't know the outcome of anything. The only thing we can control is our risk. Remember that. And I'll see you for group coaching at 12:30, and then again for Make Hogue Money at 2, and the reflection at about 3:15. Get out there and profit today, ladies and gentlemen. We are looking forward to your success. We know you are too. Let's go out there and make it happen. Have a great trading day. If I see you later on, it'd be wonderful. Have blessings to you all.